India is taking a look at what's happening, and it's realized that its growth, even though it's double digits recently, doesn't include a lot of employment growth. And for it to sustain this growth, the investment puzzle has to be solved. Even if the government can financing it through domestic agents, because if the government increases investment, then the private sector doesn't have a lot of space because it absorbs a lot of liquidity in the system. It needs to do this, and it knows so. It has so many policies to attract FDI. It liberalizes telecommunication. It raises the ratio for the insurance sector, and then for the energy sector, it's super supportive. And it's actually, if you look at it's the fourth largest in terms of capacity for renewables, and its growth, I believe, is the third largest. And so these policies are important because India finally understands that this is the infrastructure decade for India. Because to make in India, right, you can't just have people working hard. You have to have infrastructure to light the factories, to cool the air because it can get very hot there, and to ship the goods, right, across, and to build highways. I mean, it's not enough to build roads. You need super highways, right? Those are important. I think that there's a lot of moving parts, and the moving parts are getting better in ASEAN and India. And this is where my optimism is.
Hello and welcome to Velina's talk. Today's episode is dedicated to Southeast Asia, and I have a very special guest. I'm a big fan of her. This is Trinh Nguyen. She's a senior economist covering emerging Asia at Natixis Corporate and Investment Banking, and she's also a non-resident scholar at the Carnegie Endowment. Hello and welcome, Trinh.
Thank you for having me, Velina.
It's a great pleasure to have you on my show. This podcast is possible with a kind cooperation of Bharatvaarta, one of India's most important podcast producers on politics, policy, and society. Now, as you can imagine, we will kick off this episode with special focus on Southeast Asia. And you have been quite optimistic about Asia's development, despite all the doom and gloom. So please give us a kind of a perspective, your personal perspective on Asia's development and a kind of anticipation for the future development of Asia, with, of course, a special focus on Southeast Asia, given the current developments and, post-pandemic, of course, in the post-pandemic scenario.
Okay, so first, just to give a perspective, we're basically looking at markets essentially melting down because the Fed is hiking rates, and you're looking at sterling, euro, a lot of currencies, volatility, Chinese yuan weakening. And so when you look at this, of course, the headlines also on Southeast Asia that it's weakening versus the dollar, the shocks of not just the Fed, but the energy crisis, right? Which because of the Russia-Ukraine war, and then not only that, China question mark of zero COVID, whether or not when is it going to end. So all these things are really pressuring Southeast Asia. So we're not talking about a region that is immune. That said, I think if you look beyond the headlines, which blooms all the time about currencies weakening against the dollar, and you look at it on a relative basis, this region is doing rather well. I'll give you a perspective. The IDR, which is the Indonesian rupiah, which is considered what we call a 5 to 5 during Fed tapering, is only down 5% year to date. That is staggering, considering not just the double digits, but more than 20% decline of sterling, for example, right? And it's not just that versus developed countries like the yen, the euro, and even in Asia, South Korean won. So it's very resilient. And if you look at the best performing currencies, with exception of the Philippine peso, the VND, the SGD, the IDR, and so on and so forth, and even the INR, which every day everyone talks about, the weakest ever on record, right? Of course, it's the weaker on record because of the dollar raging, but on a relative basis, it's still very resilient and continues to be the best in Asia on a relative basis also versus other currencies. And so the question you have to ask is, why is this the case, right? That doesn't make any sense. These are EM currencies. And when you think about EM, you always think, particularly a country like Indonesia, you're always thinking about funding constraints, right? When the Fed raises interest rates, you would think that because of interest rate differentials and the pressure, the risk-off sentiment, you will lead to a significant portfolio capital outflow. And such significant outflow will create shocks to the currency, will create a balance of payment crisis. So it would be in the headline versus the other ones that you've seen. And of course, it does put pressure on the currencies. It does put pressure on Southeast Asia, but not the case. Three simple reasons. One is that ASEAN is coming off of a very terrible 2021 because it basically had this huge resurgence of Delta, which led them to suppress in the third quarter. And as a result of that, they just basically turned the corner, towards the end of the year and just diverged from China. So let's not forget that several years ago, we were writing about, how good Asia is because of its suppression, its hygiene, versus others. And so Southeast Asia and also India and they basically turned the corner and they decided, listen, we will accelerate the vaccination and we will open up. So that opening up really creates opportunities for private demand, private consumption, private investment to normalize. The second thing is that in juxtaposition to that, right? In juxtaposition to this opening up, this growth of the region, you then have, which basically synchronizes more with Europe and the US and also other Asian countries like Australia and etc. So it synchronizes with other countries rather than the center of gravity, which is China, right? Which then turns into itself with zero COVID policy. And that juxtaposition of China shrinking demand and normalization of demand is actually what's also helping the region to be resilient because it has its own demand. Not only that, people are starting to have this question mark. Well, if you have supply chain disruptions and you have demand deceleration and profits are down, right? The headlines couldn't be more negative, right? Profits are down. Maybe we should consider investing and diversifying if we haven't done so. And those that have done so are doing much better because they can then ramp up capacity in places like Vietnam, Malaysia, Thailand, and so on and so forth. Depends on where they are in the supply chain, and so then you have this increase of investment on even though portfolio flow is affected, you have an increase of investment from a long-term perspective, a foreign direct investment. So even though so as a result, it creates the stability on the capital side, right? And on the current account side, it also creates stability because you open up for tourism, right? When you open up for tourism, you have inflows of foreign exchange that you absolutely need. And that buffers a lot of this deterioration of terms of trade. And, not everyone is deteriorating in terms of trade, right? We're talking about Indonesia, a big winner of the energy crisis. We're talking about Malaysia, also a winner because of natural gas and palm oil. And then you have kind of a mixed bag, I would say. Vietnam, which is kind of balanced more or less. And then you have Thailand and the Philippines, right? So we're not necessarily talking about everyone losing at all, and on top of this resilience. So those are the key points that will help. And thirdly, this is an area where Velina focuses on, which is geopolitics. Geopolitics have become basically the macro play of the day, right? Because it influences the commodity market, influences, everything else. The big question mark about what will happen, the duration of this war, the duration of the energy crisis, and so on and so forth. And geopolitics also lead to long-term repositioning, right? The long-term repositioning of investment in Asia. So it's not about just long-term repositioning of investment in Europe, but particularly either European investment in Asia, North Americans investment in Asia, the Asians investment in Asia themselves, right? And so that already started before, right? Within Asia because of geopolitics in Asia, Korea, with the THAAD missiles, Japan. So there's also dynamics and also and then of course increasingly with the trade war under President Trump. And under President Biden, politics have not really soothed as many people have hoped. There isn't a floor to the U.S.-China deterioration of relationships. And the Ukraine-Russia invasion had only raised that big question mark again. Is China? What is China's role, not just this year, but longer term strategically for us? And as a result of that, you also have this third factor being very important. And being Southeast Asia is key because Southeast Asia has always, and actually the term ASEAN itself, the formation of it, right, really is about being neutral, respecting each other's sovereignty, and being neutral vis-a-vis also even geopolitics, right? And that neutrality is actually what's key at the moment, right? Because it's not, some might be under the fire of the crosswords of the war, but in many respects, you can say it can potentially be a shelter. Not a complete safe shelter, but it is nevertheless safer than elsewhere.
This is really interesting given the further bifurcation of the global system and obviously the deepening of the US-China competition. So ASEAN countries do not want to get caught in this binary world. They navigate between the two centers of power. They try to avoid taking sides. And yet, of course, at some point of time, as we saw also in the past, some of these countries are positioning themselves very clearly on, let's say, the side of the one or the other bloc, as Australia did by joining the Security and Defense Pact. So I would like to hear from you your, let's say, assessment and anticipation for the way how the US and China will be taking series of steps to win the hearts and minds of the ASEAN countries. What are your front runners in the ASEAN region in terms of course, geo-economic development? And you mentioned Indonesia. I would also like to hear your anticipation for the G20 summit. Do you expect big moves to happen there? And against this background, of course, I would like you to elaborate a little bit more also on your macro perspective for China. You already highlighted that more or less you are bullish on ASEAN and India specifically, but well, in terms of resilience, but what is your also assessment on China following COVID, zero COVID policies and this long-awaited Congress of the Communist Party in October?
Right. So let me start with the easier question and also the hardest, which is China, right? Well, I think the easy part about China is this longer term outlook, which, if you look at demographics, it's forecast that, and it's actually turned out to be worse than expected. So you have a weakening of working age population, you have population aging rapidly. And as a result of that, the lower hanging fruits of growth, which have, although not the only channel of growth for China, which is cheap wages, is basically gone, right? And going to be gone. And then as a result of that, it would have to be much more productive in its investment. It has to be more nimble. It has to change, and so on and so forth. And this year, you can see that as China is seeing its longer term growth rate decline, you also have short term shock, right? Coming from zero COVID, coming from its own suppression of its own economy, which actually impacts really particularly the service sector and the SMEs quite hard, and the youth unemployment quite hard, which is the future of China essentially. And so as a result of that, you're likely to have also this overhang. So there's a big question mark of this party of Congress especially because Hong Kong has turned the corner. If when are we going to turn the corner on the zero COVID, so we lift the suppression to growth? But it isn't the only one, right? You have the real estate sector. You have the big question mark about the future of Chinese policy regarding technology, regarding the role of the state. And that question is not really much of a question because it tells you already what it has done, right? Which is very heavy-handed. But many still have a lot of hope for this direction. So in long story short, I would say that China is positioning itself to become even increasingly state-led, right? There's consolidation of the real estate sector and increasingly the state even in other sectors like tech and et cetera, and that has implications on innovations, has implications on how much this is going to accelerate the deceleration of growth that we're expected. Moreover, which sectors are allowed to grow in China? Is there a role for foreign investors? Is there a role for European companies? Is there a role for American companies, for Japanese companies, for South Korean companies exporting semiconductor, right? That's a big question mark because China also wants to increase its self-sufficiency in technology, self-sufficiency in many aspects of economy. So that short-term consideration and also this longer-term strategic consideration, and not to mention the fact of geopolitics, I would say has a huge impact on the investment landscape in China in the next several years and also the next several decades for Chinese investors, private investors, and also for foreign investors. So one, I think a lot of people pay a lot of attention to how European companies feel in China, right? How American companies feel, because they have these chambers of commerce that are very vocal to try to advocate. But also Chinese companies also feel that, particularly ones that are squeezed by geopolitics, right? So they would also feel the need that they will make these arrangements and diversify. So all those factors, I think, is going to complicate the growth outlook, and whether or not China will grow higher next year because of this favorable base effect or not. I think that consideration is not going to take away the calculus that longer term growth trends in China will decelerate. And more importantly, the geopolitical aspect of it will put a lot of pressure. Not to mention, once Xi Jinping consolidates power and takes over, will he continue more of what we have already known, the path that he's taken? Or is he going to change and turn around and turn into a more market-friendly, as investors have hoped, right? So we don't really know these questions, but at the very least, we know that longer-term outlook for China is not very good at the moment, particularly with the pressure cooker on for the United States, raising interest rates. So I think that I would take that angle. Now, if you look at how the rest of Asia looks at this, particularly Southeast Asia, right? Then on the one hand, we look at the relationship with China as that we see the weakening of China as both, of course, as a negative because we export to China. So that's a negative in itself, because, for two reasons. Either it's a weakening because of self-sufficiency, it doesn't need from us as it integrates its value chain, as it focuses more, or it's weakening for because of its domestic demand, right? Either reasons is not positive for the region because the trade pie is not growing. Moreover, geopolitics is also, in terms of becoming more complicated, is also not good for the region because it means that we have a system and suddenly it's changing. Right? Change is very difficult, right? Usually means it's disruption, right? So for Southeast Asia, I think it creates a lot of shock, uncertainty, particularly if the change negatively impact markets it cares about, which is the EU or the US, particularly the US, right? So if those changes impact those markets. Now, as a result of that, I think the region sees this as a huge risk, but at the same time, it's also seeing it as an opportunity. Right, an opportunity because an opportunity to essentially catch up to China because it's done, other than the very negative news this year, China has done a good job in terms of raising GDP per capita. It's now the second largest in terms of importing of goods. When you're the largest importer of goods globally, you have people care about what's going on in China, right? Because it has commercial value. And I think for that, it gives the rest of the region a chance to catch up because of these opportunities created in this change and this disruption. Now, having said that, being able to capitalize it, and that's essentially what has happened for a long time now, particularly for certain countries that navigate this well, they also seize challenges in over exploiting this, right? Because you also have to realize that a good example is a country like Vietnam, right? It sees itself as a country that is a China plus one, essentially, in the supply chain, right? It's capturing more and increasingly a diversification play. And it wants to lean towards the EU more because then it can create an arbitrage, not just labor cost arbitrage, as I mentioned, of China weakening demographic trends, and Vietnam is relatively better, but also even policies arbitrage, geopolitics arbitrage, right? Because Vietnam has an EU FTA, China doesn't. That means that you have lower barriers to trade and investment. Not just for European companies or Vietnamese companies that want to access the European market, but you also have Chinese companies, South Africans, and so on and so forth, all these companies, and they would set up shop in Vietnam, right? Because of this. So Vietnam is positioning itself to get all this arbitrage and moreover on different levels. Now, I think having said that, I think it also has to be careful in overplaying its hands, and it still has to be mindful that China is at the door, right? It's in Vietnam and China share a border. And it also shares a huge trade relationships, right? It shares not just that, also cultural and et cetera, et cetera. So it's not so much that these countries want to remove itself from China, so to speak, but to create arbitrage opportunities so that it can become a neutral third place for the geopolitical landscape that's happening. Meanwhile, at the same time, in many respects, one could argue, and it would make sense, right? Its relationship with China is one that it considers strategic, one that you would say you don't want China to invade, you don't want to piss off China, you want to placate, you want to make sure you show respect, and so on and so forth. And having been in the region for a long time, I would say a country that does this well is Vietnam, right? Vietnam and China are both communist countries. In many respects, you can say that while the last war that China ever fought was with Vietnam, it also supported Vietnam, right? So that is a very complicated relationship it has with each other, and one that I think, a country that does quite well in getting favors and getting these EU FTAs. A lot of people were opposed to it because it says, it's not a market economy, and at the same time, it managed to do so. So I would say it's a front runner. Singapore is another one that's very good, but Singapore, in many ways, you can say that Vietnam tries to learn from Singapore, right? Singapore is also a country that's very good in, a good example is what's happening in Hong Kong. Although Hong Kong is easing, what's happening in Hong Kong creates this huge flourish of the Singaporean wealth management, the private office in Singapore. And not only that, it's increasing its opportunities for itself. So not just a short-term arbitrage, in relocating to Singapore for financial services and so on and so forth. It wants to position itself, to even to not just be arbitration, but even to becoming an outright financial center, right? But at the same time, it's also mindful that it's essentially playing in China's background, and it's a city-state, right? It's even though GDP per capita is very big, it's a small little place, right? So as a result of that, I think a lot of the Asian countries are increasingly becoming more adept at maneuvering it. I think a country that is less adept, in my opinion, although you should take this a huge grain of salt, because I'm not a geopolitical analyst or anything. But I would say more the Philippines, because it's located in South China Sea, and it doesn't use its position very well in terms of maintaining somewhat of a neutrality to leverage investment, to leverage support, so that you can be this particular country. And I think the new president is trying to do so, to walk back a bit with what Duterte did, which is moving entirely towards the China camp, right? And as a result of that, it doesn't get visits from, the first country that Vice President Kamala Harris went to visit was in the Philippines. It wasn't on that list. The first country that PM Kishida visited was Vietnam. It wasn't the Philippines. It wasn't on the list. When a Chinese, a top official leaving China to do a Southeast Asia tour, the Philippines is not on the top of the list, right? So I think as a result of that, you can see that it could do more, and it has a role to play. And I think so I would say it's less of a front runner in leveraging what's happening, and just in general leveraging what inherently has, which is a very skilled labor force, right? Especially even relative to Vietnam, right? It speaks English, very well trained nurses, engineers. Many of them have to go abroad to find opportunities, whether the Middle East or Singapore and so on and so forth. And it doesn't really leverage it to actually, instead of creating opportunities on shore, it basically says we have this policy where you can go abroad and tap into other countries' opportunities. But we will create this pool of skilled labor, and we're quite good at it. And a lot of countries in Southeast Asia, a lot of students actually go to the Philippines to study English and etc. Particularly the Koreans, right? So I think it's a country where there could be more to do. Indonesia is getting, in my opinion, better. It's the largest economy in the region, and it's also, in terms of land mass, in terms of positioning. And I think Jokowi is getting better in doing so, particularly with G20 and trying to see how he can leverage and tap into these opportunities. A lot of change is happening, right? The energy crisis is also about the energy transition. How do we expand sources of energy that is more sustainable and so on and so forth? So President Jokowi is also positioning himself during the supply shock to say, listen, securing your supply chain is very important. And at the epicenter of this is we have nickel, and we are the largest producer with largest reserves. We're going to create policies so that can happen there. And I think it's creating more pockets of bargaining power for itself in certain strategic sectors. And it's moving, in my opinion, in the right direction. But certainly more could be done. So I haven't really talked about Malaysia and Thailand. I think Malaysia and Thailand have been the first to really develop in Asia in terms of moving, other than Singapore. We're talking about between Indonesia, the Philippines. But they have a bit distracted, right? So Thailand right now is negotiating an EU FTA with the EU. It is signed agreement, so there's still a long ways to go. And I think one of the things that COVID and what's happening in China has been a wake-up call for Thailand is the fact that it became very dependent on Chinese tourists. A third of them came pre-COVID to Thailand. And GDP, it's in double digits dependent on tourism, right? As the share of exports, which they have traditionally been very good at, having a huge mix from food to manufactured goods to being very key to the auto supply chain and so on and so forth, have stagnated, while this huge dependency on China, and also after the coup, turned towards China also for financing as well, because of the turning away by Western powers away from Thailand, right? Now, because of what's happening with tourism, Thailand realized that it put too many eggs in one basket, right? So it needs to diversify. It needs to basically take the game that Vietnam has been doing, and that game that it basically engineered, right? It provided a model for the rest of the Asians to follow, because it engineered with the auto sector, with the Japanese. And because of the political issues in Thailand, it hasn't been long-term economic development, hasn't been at the forefront of the agenda because of the political situation there. But because of survival instinct, because it needs to open up to tourism, to diversify the tourism market, even without the Chinese mainland tourists, Thailand have to also consider other sources of income, right? So as a result of that, you see Thailand also increasingly more aggressive at this game versus before. And I think also Malaysia in a certain segment of the supply chain, for such as semiconductor. But I think more could be done. And Malaysia also faces a very similar challenge to Thailand regarding politics, but it's finally, I'm not an expert in Malaysian politics, but hopefully turning a corner. And it's also putting some emphasis that it is a center for manufacturing, particularly on medium tech. And within this group of countries, I would say the full front runner would be Thailand, not Thailand, Vietnam, Singapore, and really leveraging this and playing this geopolitical game well. And at the other end, I would say perhaps the Philippines less well. Although that can change very rapidly. And I think the new president is trying to change that, right?
This has been a fascinating overview, and I have so many additional questions, but I have to be careful to not overextend the time of our conversation. So a direct question derived from what you've just outlined for us is, what kind of avenues for future cooperation do you see, for instance, in terms of businesses that will be relocating from China? Because obviously one manifested problem during the pandemic and afterwards has been the interconnectedness of the global system, and specifically global supply chains. And right now, and you mentioned that already in various examples, there is this kind of effort on the side of all relevant actors to reconfigure global and specifically regional supply chains. The next problem being the infrastructure investments. Do you see also a kind of competition coming from, let's say, the most relevant regional actors over infrastructure projects? Now, we know, of course, the leading China's Belt and Road Initiative, and given the problems that you've outlined for us when it comes to China, would that be once again a way for China to, let's say, generate or save a lot of companies, Chinese companies, by basically helping them get a food, outside of China, as we saw in the previous decade, specifically after the launch of the Belt and Road Initiative. And that means, of course, Chinese companies moving towards Africa, moving towards other, parts of Asia, South Asia, Central Asia, West Asia, and at the very same time, other infrastructure projects launched by United States, I think 600 billion, and the European Union with the Global Gateway, another 300 billion, focusing more or increasingly on also ASEAN countries, whether this will be beneficial for the region. And in addition to that, are you witnessing a kind of an Indo-Pacific decade, with also India obviously becoming one of these major hubs, relocation of businesses for launching new industries? Now, I think of the semiconductor industry with the help of Taiwan, probably Japan, so the Quad, relations. Whether this is going to be one possible avenue for regional cooperation. And final, of course, you mentioned the green transition. How do you see the implication of the green transition and protectionist policies by the US and the European Union? These are the leading actors of the decarbonization. But then again, we see a region that is en route to more economic growth. And obviously, with India being projected to become world's economic power number 3, a lot of ASEAN countries also en route to a further economic growth. They will be in the dire need of fossil fuels next to, of course, renewables. How do you see this kind of, let's say, conflict between decarbonization goals by the US and the European Union, given also their trade policies in the region, and of course the economic agendas of these countries, which first and foremost will be looking to ensure and guarantee this economic growth for the sake of their population and their businesses?
Okay, so that's a lot of questions. Let me first start with the first, because that's what I focus on, because I'm just like, and then you can just interrupt me and continue. But let's talk about, before we talk about opportunities for diversification, we have to discuss China. And I think there is, let's not forget, just because we're now focusing on zero COVID in China and there's a lot of suppression of demand and supply chain disruption and so on and so forth, that it is a huge exporter in the world, right? And its global market share is only rising. And of course, exports are decelerating and likely to decelerate in the future if we have a lot of new investment in not just European, but American, but Chinese going elsewhere, then the exports are showing up elsewhere, right? So we're not just having a cyclical slowdown, but likely to share. But if you dissect that, right, like let's just look at trade. China is basically specializing in everything on the manufacturing side. So it imports commodity, it exports manufactured goods. And within this, you have labor intensive, which is like its global market share is huge. So we're talking about China wages and labor becoming less competitive, but right now it is a kingmaker, right? It's like about roughly, I think I wrote in a report, roughly 30-something% of global market share of labor intensive. A country like India with equivalent with a lot of people, 800, 900 million working age population, so basically 800 something rising to 900 something, right? And now its market share is smaller than Vietnam, right? And which is basically, if you look at India's exports, its global manufacturing market share is less than 2%. China is roughly 20%, right? Vietnam is higher than India. And what's more staggering about India's exports is it's primarily high skilled manufacture exports. where it's comparative. Of course, we know Indians are very smart and they're very good at IT services exports, and most of the CEOs in the US are Indians and so on and so forth. But what is staggering is that here in its manufacture exports, while China, we're talking about this worsening of everything, it still is having so much. And so India, there's a lot of room for India to grow. So China can be a good lesson, even if it's just taking half of the slice of the pie or a tenth of the size. So it's able to capitalize more of this endowment that's not being capitalized, right? And then so I think that, and then of course, ASEAN's market share is much higher because it's particularly if you look at already a country like Vietnam has a higher market share than India in terms of manufactured goods, then that means that there's a lot of room for India to grow. So for China, you can see that where it's specialized. So, and then of course the reports are all about China moving up in the high value chain. So it has the intermediates, and they also had moving up in producing more of the inputs, not just semiconductor. It wants to go into the high end of the semiconductor and so on and so forth. Now, because it's very clear, very similar to India, when you have a lot of people, you really just need to provide a lot of jobs, right? So despite excelling in exporting, it still has huge youth unemployment, right? Because it has this zero COVID policies and all long-term structural growth problems and so on and so forth. So for China, where it excels is efficiency, scale, and not to forget, in order to export all of this stuff, to move from one part of China to the other, you need infrastructure. So another part that's showing up in this export picture for China, not only the skills of Chinese labor and then the laws making it very favorable, but you have this hard infrastructure, the hard infrastructure to support this. And so one of the things that China has been an example of the rest of the region, and particularly why there's a huge emphasis on infrastructure at the moment for ASEAN and India, is really it understands that you need to match the stock of labor with a stock of capital, particularly not just the skills, but also for them to move goods, from one port to the other, to move globally. So the biggest ports in the world in China. Of course, the scale and the efficiency are under attack because of the limited restrictions on mobility, right? So even if you have good infrastructure, mobility is restricted, this can be problematic, right? And because of that, it creates opportunities. And the opportunities, I think, are for those that recognize not just where China excel, but also where the challenges to doing business in China. And so for the rest of Southeast Asia and also India to capture more of this, it needs to then, as you mentioned, make sure that to attract businesses, if you're a global manufacturer to export to the rest of the world, you need to have electricity, right, to turn on the factories, and consistent electricity so it doesn't have blackouts. Blackouts are major news stories these days, right? It's major for a bad reason, So the input costs have to be not just labor is one input cost, right? Electricity is one input cost. The building of the factories, the shipping of goods on the roads, roads that connect, highways that connect. You don't stay on the highway for days and hard to get to ports, right? If you're exporting our culture products, for example, manufactured goods can be delayed, and even so, then you're not competitive, and then you get to the ports, which then have to go, right? Either you're shipped by air or via ship. So these interconnections are very important. Infrastructure is very important. And that is a missing of the puzzle for India. Less so for Malaysia, which has actually very good infrastructure. Even, we did a study and compared existing supply. It's even better than China, right? But China is a big country. So there are countries within Southeast Asia where the infrastructure is very good. Thailand and Malaysia have really good infrastructure. That's why the issues with producing there isn't about infrastructure. It's about finding cheap labor, right? So you specialize in sectors that are more capital intensive, right? Because Thailand also has the same challenge as China has, which is an aging population and so on and so forth. So that's why if you look at Malaysia, it's more on the packaging of semiconductor. It got this huge investment from Intel, and it's likely to get more and more investment on a high tech. So if you're offshoring on a high tech and you need very decent infrastructure and so on and so forth, Malaysia is a place to go, and not many companies go there. And of course, there's Vietnam's, which is basically located right next to China, right? Like right there, and it creates this electronics hub, not just at the north, but the south. And what Vietnam did before it increases, beef up its infrastructure, was to say, look, if there are hurdles investing in us because we have poor infrastructure, for you, as a big project that we want, which is what it did with Samsung Electronics, which now manufacture more than half of its handphones. So now it has issues of diversifying from Vietnam, right? It has too much concentration risk in Vietnam when we talk about concentration risk. But the point is that it was able to be very successful because it overcame its own weaknesses by pushing for something that it really wants, right? So we have this very proactive policy from the state, which basically they learned from Thailand, they learned from China, for example. So it was very proactive with tax cuts and so on and so forth. And now it doesn't have to be so much, right? Because now it's creating this scale, this efficiency, and also improving its highway, improving its connectivity, investing a lot in energy, right? Because you need energy to run the industrialization process of a country, right? It's quite important as an input. So as a result of that, you're seeing this ramp up, and this is just talking about exports, right? Talking about supporting the harnessing of the human capital. This is sheer size of the number of people, because that's what we have in Asia. That's what we have in India. We're not land rich like Australia. Our competitive advantage is really, we have a lot of people. And how do we harness this power of the people to compete in the global marketplace? We do that by matching it with the necessary infrastructure to make investors overcome this hesitancy to invest there, right? And it isn't the only one. Hard infrastructure isn't the only challenge. There's also soft infrastructure. Red tape, decentralization of governments can be a challenge, right? So if you want to invest in a certain province, the central government gives you approval, you get to the province and it doesn't work out, right? So I think there's a whole long list of issues that needs to be addressed. And I think those challenges are being slowly and hopefully aggressively addressed in India, right? So this is where, Vietnam has done this and it needs to do more. But India is taking a look at what's happening, and it's realized that its growth, even though it's double digits recently, doesn't include a lot of employment growth. And for it to sustain this growth, the investment puzzle has to be solved. Even if the government can financing it through domestic agents, because if the government increases investment, then the private sector doesn't have a lot of space because it absorbs a lot of liquidity in the system. And so it needs to do this, and it knows so. It has so many policies to attract FDI, it liberalizes telecommunication, it raises the ratio for the insurance sector, and then for the energy sector, it's super supportive. And it's actually, if you look at it's the fourth largest in terms of capacity for renewables, and its growth, I believe, is the third largest. And so these policies are important because India finally understands that this is the infrastructure decade for India. Because to make in India, right, you can't just have people working hard. You have to have infrastructure to light the factories, to cool the air because it can get very hot there, and to ship the goods, right, across, and to build highways. It's not enough to build roads. You actually, India, to many people's surprise, actually has built more roads than China. But you can't count roads, right? You have to count the quality of roads, and you have to count where do these roads go, right? Building road is one story. You need superhighways, right? Those are important, and superhighways are harder to build in a place that's not as centralized as China, right? I think there's a lot of moving parts, and the moving parts are getting better in ASEAN and India, and this is where my optimism is. So it isn't just these three things that we talk about where, you have the geopolitics, and you have China, which basically zero COVID eventually has to end, right? China cannot sustain zero COVID forever, and all these things are helping the region, but the region has to help itself, right? These countries have to help themselves. And these countries have to be aggressive, because when you're not aggressive, you're competing against other countries that are more aggressive, to attract investors, because investors have many destinations to go. There are very many options, right? To stay in China. Actually, that's in rule of inertia. You stay where you need, unless you're pushed, you stay, right? So there's a bit of push now, but then once you get pushed, the question is like, okay, where to, right? Where do we go from here? And that's a huge question mark. And so countries say, here, look at me. This is where you go, and this is how you do it. And here's a one-stop shop. Here's this and that. And the biggest advertisement to this, on top of proactive government policies, is other company doing it, right? If your peers are going to Vietnam, you naturally would just go there because that's a huge advertisement. If the biggest company, Samsung Electronics, go there, then its suppliers will go there, right? Its South Korean suppliers will go there. If Foxconn goes to Vietnam, then the Foxconn suppliers will go there. If Foxconn open in India, right? And if it's not a complete disaster, right? And it's successful and it stays and it expands and so on and so forth, then you will have growth in clusters and linkages and et cetera, et cetera. And so it's very important, just like Vietnam in the beginning, to make sure that the very big projects that you work hard to win, that they succeed. Because their success is your success. Because it's basically an advertisement for doing business there. There's nothing that says an advertisement then Samsung Electronics going to Vietnam and then continuing to expand. So now it's considering building chips there, right? So it's continuation. And then it say other companies from Lego in Denmark, which also recently built more renewables through policy. So India is a country that also is doing a lot to that. But it isn't the only one. Indonesia sees itself as it's really focusing a lot on this EV supply chain. But I think on the manufacturing side, it could do a lot more as well. And I think the infrastructure push that the president is going for is the right direction. It's a question of making sure that the projects are actually efficiency producing, they're actually yielding results, and they're actually helping people. The second equation to this infrastructure for trade, not just for trade, but for people, because you have these countries, you have a lot of people, it reduces the bottlenecks of the economy, it creates efficiency and productivity and so on and so forth. And the urbanization is so great. In Indonesia, they're going to add 50 million people in the next 2-3 decades. India is going to urbanize further. So the urbanization process in itself will also require the government to invest, to basically just to keep up with it, right? Not to mention to improve what you have, right? Because the more people you have putting pressure on the same road reduces the efficiency of that road, right? Because you have logs, you have potholes, you really just have to keep up with the infrastructure. So I think within the region, demand is not a problem, right? Demand for infrastructure is not a problem. There are a few countries that are very good, like Malaysia, Thailand. Vietnam is getting better. So it's like one of those countries that's like before it was much worse than say even Indonesia, for example. It has improved tremendously. It's still behind Thailand and Malaysia, but it's making up for lost time, and it continues to invest quite substantially. That's because Vietnam is able to extract revenue. Its revenue ratio is like 25%, even higher than of GDP, even higher than China. Now, a country like India and Indonesia, the revenue ratios are much lower, right? They're in the tens digit. Now, to do that, of course, you have government policies. This year, for the fiscal year for India, there's a huge increase, about 35% increase in capex allocation. Unfortunately, fertilizer prices rose, so then subsidies are absorbing a lot of it. So even if the government is putting a lot of push through supportive policy to actual spending on infrastructure, deployment of projects, and so on and so forth, these countries will need investors, foreign investors to come in to help financing. And I think you alluded to this question of foreign actors, right? Is China Belt and Road? European countries are very active as well. Good examples is I believe the European Union is supporting the second line extension in Vietnam, Hanoi. It just doesn't advertise it as well, right? China is so much better at advertising this. And, not to mention other actors that have been very strong in the region, which is the Japanese, right? The Japanese are the forefront of investing in the region through its many institutions, from JICA, and so on and so forth. And I think, but beyond that, you have the role of not just government, importantly, private investors, right? In an inflationary environment, what should you invest in? The answer is real assets, right? Because it's very clearly a hedge against inflation. Now, despite the fact that funding conditions are becoming worse because of higher interest rates and so on and so forth, and risk aversions on a portfolio side, I believe that there is a lot of appetite, a lot of investors with dry powder looking for projects, good projects, right? Because just because you have demand doesn't mean all the projects are worthwhile. So you need to do due diligence and so on and so forth. So there are a lot, from Europe, from Asia, from the US, particularly the Americans. They're very strong in the region as well. And then within Asia, the Chinese and everyone is looking for projects. So I think the challenge here isn't really, even if on the surface funding conditions becoming more difficult, and it really is true, but at the same time there is a lot of also demand to finance this need to build infrastructure. And the government policies do help. So I hope that answers the question on the funding side. I think I forgot the other questions you asked.
Well, you've been actually quite generous with your time so far to extensively answer the questions, but mostly what I was also alluding to was, of course, the hedging strategies of Southeastern Asian countries, given the growing competition between United States and China, and also given the fact that other regional actors, and I gave the example with the European Union, but also other relevant actors in the region like Japan, will be investing a lot in relocating away from China, creating alternative supply chains and value chains away from China, mostly as a hedge strategy, but also given the new realities that you've extensively outlined, and the new potential in Southeast Asia. So my question was also related to your, let's say, macro perspective for the future, whether you would be anticipating, let's say, deepening, growing competition between United States and China, and also other relevant regional actors, the European Union. How do you see the region in this growing competition being positioned, and what kind of hedge strategies will these countries develop, given also the current global recession scenario, the growing inflation, the monetary policy by the central banks of developed economies? How is this going to affect the region? Maybe you can just wrap up this in your final remarks, as we have already approached the 60 minutes
Okay.
format, and I really don't want to keep you too long, as I know that you have a very busy schedule.
Yeah, absolutely. So let me just forgot. I realized that you asked me about the green transition, right?
And of course, one of the examples is with the
Yeah,
green
yeah, yeah, yeah.
transition, that
Right, right.
also the digitalization, of course, but green transition in the sense that well-developed economies launch decarbonization policies in their own countries, but are going to also, of course, extend this portfolio towards the region. And at the very same time, as you said, so this region is en route to, well, promoting
Right.
more economic growth.
So I think, well, green changes, right? So it used to not include glass and nuclear. So I think what I would like to say is more the sustainability of the growth and, of the region. And I think particularly India is a good country. We talk about diversification supply chains, and the need for the region to really, particularly India, to really ramp up its capturing of this, right, through the strategies. But to ramp up, it needs to invest in infrastructure. What kind of infrastructure? So much, right? Connectivity, transport, telecommunications, so on and so forth, digital infrastructure, broadband, so on and so forth. But most importantly, of course, is energy, right? Energy is important because India is one of the most polluted places in a certain times of the year, right? And so it's tried to, for example, help the household to move more to use gas more, so it's less polluting on the energy for electricity and etc. I just mentioned that it wants to increase the share of renewables, right? Because in a lot of countries, you have to realize that in the middle of this crisis, everyone's trying to transition away from Russian natural gas, right? Particularly the European Union. Now, the problem with that is that it's going for LNG. LNG is also the same thing that a lot of countries in Asia is transitioning to have a greener energy mix from coal, right? So that is highly problematic for countries that don't have deep pockets like the European Unions. So India this is one of the reasons why renewables are growing so much. And renewables also solve a lot of the Indian problems, such as transportation. For coal, you have to transport, right, across to reach to where you need it. There's also the distribution system. India loses about 20% of electricity through transmission, right? So that's a lot, right? So it's already hard enough to produce is another. So I think that has a role, and that is one of the sectors that's growing a lot because it's getting a lot of government support as well. And across the board, you have a lot of countries increasingly much more aggressive. Vietnam is another example of a country where this growth of industrial production, this double digits growth of exports, this exports, the share of GDP surpassing 100% of GDP, has to be powered, and traditionally it has been powered by coal and also other sources, but quite a lot. Vietnam and India and China, one of the countries that use a lot of coal, but Vietnam is also pushing for renewable growth, right? And it's actually has the largest stock of renewable in the region. So I think sustainable growth is very important because climate change is going going to impact the region quite severely. Saigon, Ho Chi Minh City is sinking, right? And it's getting flooded and so on and so forth. So it's a huge challenge that they have to confront. And I think that is continues to be a huge push. And it isn't just sustainable growth, but it's also a security issue, right? What we have learned from COVID and also the Russian-Ukraine crisis is security comes not just absolute security of securing your borders, but securing your food, securing your supply chain, your public health, and so on and so forth. Security in energy, right? And within this, then this word, this catchphrase of diversification becomes crucial. And that's a lesson that Germany is learning, right? Even no matter how good the subsource and conveniently located Russia is, and then you have this gas, and if you don't have diversified sources, when that one thing you depend on gets shut off, that's a problem. Thailand also learned that problem with tourism, right, and so on and so forth. So I think that diversification pitch is happening across in the energy sector and infrastructure, in attracting investors. The Southeast Asian and the Indians also, just as investors are trying to pitch, they're also trying to diversify that so that they don't become too dependent on one actor, particularly the actor doesn't have the best interest at heart. And in fact, few do, right? You have more that align more with your interests than others. You should have the onus to look after your own interests, right? And I think that's a lesson here. And I think many of them are understanding this and taking, I would say one of the positives and one of the reasons I'm more constructive about Southeast Asia and India is that it's taking less of a victim approach. It's taking more of a very proactive approach. This is our moment to not miss, right? If you listen to the messaging coming out of India, we cannot miss the boat, right? We need to do more. We need to be more attractive to investors. We need to diversify and so on and so on. So the outlook for me, to think about the region, one would have to think, is it cyclical and structural? Cyclically, we're at the end of the third quarter, looking into fourth quarter. The fourth quarter is going to look less good than what we have had so far. So far in the region, growth and indicators have been quite resilient, right? A lot of these shocks are going to bite into the fourth quarter. It's going to be a slowdown, not a recession or anything like this. But we're starting to have a tightening of financial conditions and so on and so forth. And I think the turn of next year is really dependent on how sharp the bite of higher interest rates, the duration of the war, China, we have a recession in China. Will the recession in China, well, actually we have a European recession likely to happen. And what about the US, right? So if we now can still grow our exports because of resilience of demand in the US, what happens when you have a deceleration, et cetera, of demand across the world? So I think for the region as a whole, it's getting a bit tougher because we now have started to run out of space to fight inflation. So far inflation has been very benign. Indonesia is a good example. Inflation is very low, right? But because it's spending so much money to subsidize, They're paying twice the cost of production of gas, and that has blown a hole in the budget. And as a result of that, all of those measures that they have done to keep inflation very low are actually running out of space. So as a result, you're going to see interest rate hikes more aggressively for Asia, EM Asia ex China. We don't expect hike for China, of course. And as a result of that, you see a slowing of cyclical growth. Structurally, I think it will continue to be quite strong for the reasons I mentioned. Eventually, portfolio flows, when the raising of rates will make it more attractive for the region. Growth outlook remains attractive over the longer term. And more importantly, for long-term investment, the liberalization of FDI in India and Indonesia and Vietnam and many countries, as they're becoming to, sobering realization that we need to also make it very attractive for people to come. And the push from geopolitics and the pull these countries will try to pull as much as they can will also support long-term investment in the region. So I'm quite constructive for the region. So cyclically, a bit of a slowdown, but longer term, quite constructive for ASEAN and India.
Well, this has been a fascinating overview, and I do share your optimism about the region. I have been very bullish on India. In fact, I've been arguing that we are going to witness the Indo-Pacific decade with, of course, emphasis on ASEAN, given all the global geopolitics and the competition between United States and China, because competition has a lot of positive connotation specifically for this region and for these countries. And I want to thank you for taking the time and for staying with us for so long to answer so many questions, not only my questions, but also a lot of questions from the audience. And we will love to have you again on this show, because there are so many more questions for you, specific questions regarding the dynamics in one or the other country or in the region. So we will be having a lot to unpack probably in the next episode. So I look forward to having you again on Velina's Talk, and I wish you much success with all your endeavors, and specifically enjoy your trip to Europe right now.
Thank you very much, Velina. It's been great.
Thank you, Trinh, and see you again.
Bye-bye.
Bye-bye.
Thank you for tuning in to this episode of the Bharatvaarta podcast. If you want to see more content like this, then don't forget to subscribe to our channel. We started Bharatvaarta to facilitate long-form discussions on politics, policy, and culture. We don't necessarily endorse anything that was said in this episode. If you wish to offer us feedback, do reach out to us on social media. We are at Bharatvaarta on Facebook, Twitter, and Instagram. You could also get in touch with us on our website, www.bharatvaarta.in. The links are in the description below. Until next time, stay safe, take care, and Jai Hind.